Welcome, everybody. My name is John Boitnott, and you've arrived at From the Ground Up. Today we have Adriel Tam joining us. Hi, Adriel. How are you today?
I'm doing great, John. How are you?
I'm great. And Adriel, you run the company AdvisorCheck. Tell us a little bit about that company and what it's meant to do in the world.
Sure. AdvisorCheck is pretty simple. It's meant to help provide transparency to consumers and investors, and it is meant to create a platform where investors can feel safe, it's easy to use, and they can connect with financial advisors and the firms that they represent on our platform.
Why is something like this never been built before? I feel like there should have been something out there that addressed this, but it's great that you're doing that. Tell us why that hasn't been done yet.
Absolutely. I think that what the public sees is they see versions of this. They see matchmaking sites. They see places where they can go and they provide some information, and then the website will connect them with, oh, the best advisor for their services. And I think it's a misrepresentation of what that is. These firms tend to be solicitors. They tend to be lead generation services. So yes, they collect some information from the consumer, maybe their name, their email, their phone number, approximate income, net worth, and they supposedly match them with a financial advisor, but really on the back end, what they're doing is they're auctioning off your information. So they take your information and say, this client has $250,000 of assets. Who wants to pay the most for it? They auction it off to three different vendors who then, if you've ever experienced it, those three vendors will then call you, email you consistently, trying to schedule a meeting, trying to get you to come and sign up. So it's not a true service that is meant for the benefit of the consumer. It's meant for the benefit of the firms that are participating in these programs. And then these firms, the matchmaking websites, they tend to have a solicitation agreement. So if you refer $250,000 over, they might participate in fees with that firm that eventually wins that client, or they charge a large fee to have that introduction. So it's nothing bad about this in terms of, the firms say that they're doing this. They try to represent that they are matchmaking. What's bad for the consumers is that you're not getting the match with all the financial advisors, all the professionals out there who exist. You're just getting a very small subset of people who are willing to pay this extraordinary fee to try and win your business. And that's what I don't like, is that it's not transparent. It's not really in the consumer's best interest. And it's not a place that's even playing field for both the advisor and the consumer that are interested in connecting.
Got it. So you're trying to bring some transparency to this particular world out there. How is this transparency movement going so far?
Absolutely. I think with transparency and just disruption in general, disruptors are both loved and hated, right? So I think when Uber came in and disrupted the taxi industry with rideshare, people loved it. Consumers loved it because it was cheaper. And then you got to know who was picking you up. But taxi drivers who had paid for these medallions, paid for the privilege of being a taxi operator, hated it. They hated it. Same thing here is we have people that love transparency. They talk about it all the time. They want to have a better understanding of the services that their advisor is providing for them and the fees that they're charging. And good advisors love it too, because they have nothing to hide. They want to show you what they're providing, and they want you to know that what they're providing is right out there in writing, and then they deliver on that agreement. So there's a group that absolutely loves it, and there's a group that absolutely hates it. I can't tell you how many times we get people saying, take my information down. I don't know who you guys are. And that's great, because we're here for public service, because we're here to provide additional help to the consumers to understand what they're looking for. So if you're holding yourself out in the public eye as a financial advisor, you're registered, you're licensed, you are in the public space. And so places like AdvisorCheck and what we're creating are so important to the consumer to provide research on someone that they may or may not know. As an example, you're given a name, maybe from your CPA or your friend or your neighbor says, oh, I work with Jeff. He's a great financial advisor. Well, how do you know he is? Well, that's what AdvisorCheck does, is the ability for you to actually get real information about that advisor in an easy to use and safe platform.
I would think that this would actually be something that not only the consumer, but the advisors out there, especially the ones that are pretty reputable and don't have anything to hide and are really delivering a good service, I would think that this would be something that they would be fully on board with. And would you agree with that? And also, have you talked to any who like the service so far and how it's helped them?
Absolutely. Your first part, yes, I think there's been a lot of great advisor feedback that they love it. They love the transparency. Because unfortunately we have a lot of bad actors in our industry. You know, Bernie Madoff being the most famous one, huge Ponzi scheme, and they want to shine a light on all these bad actors. They want to shine a light on people who are selling bad products, who don't have clients' best interests in mind. They love it because we want to raise and elevate the industry. And be totally transparent on that. I love the industry. I came from the industry. I built a great firm up to almost $1 billion in assets. We sold that firm. And I love this industry. And my goal is to see more consumers, more investors work with more financial advisors than are currently working with them today, because they can add so much value to that relationship, to the overall value of what the client is trying to accomplish for the long run. And I apologize, I forgot the second part of your question.
Oh, no, just have you talked to any advisors out there who appreciate the service because it sort of helps them a little bit more, seeing as how they're more reputable to begin with?
Absolutely. Yeah, we actually just started doing some consumer feedback surveys as well. And what the feedback we've gotten from their side has also been the information we provide is really easy to understand. It's more in depth than what's available out there. And I will say that the challenge with searching the internet or trying to go to platforms to get information is that the wealth management and financial firms in general, we try to hide things in plain sight. And the way we try to do that is we overwhelm you with information. So if you go to a place like BrokerCheck or IAPD at the SEC, they're providing mountains of paperwork. It's hundreds of pages when you look someone up, and it's not easy to understand or follow. And this is coming from an industry vet who used to do this all the time. And the reason they do it is so that you don't really investigate. You don't really dig into what does it mean? You know, do you participate in client transactions? Are you a fiduciary? Are you an RIA only, or are you affiliated with a broker dealer? What type of disclosures do you have? You know, many of these large firms have hundreds of disclosures. And so I think bringing that to light is important for us to have the information. The second part of that is also to present the information in a way that the consumer understands it, is easy to digest, and is safe. And I think that's the feedback we're getting right now, which is great off our product launches, that it's easy to understand, it's easy to use, and people appreciate that it's there.
Yeah, I think my next question is more of a general question on sort of the economic environment that we're in right now. I mean, things seem to be, we're struggling in many ways. We have higher inflation, we have higher interest rates, but things, numbers like unemployment are down right now, which is a great thing. So we kind of have a mixed bag going on. But why is a company and a service like AdvisorCheck, even more important in a time like this for consumers facing economic headwinds?
That's the question I love. The crystal ball question. What's going to happen? Where are we at today? And I think any good financial advisor and firm worth their weight is we don't know. They just truly don't know. It's very hard to predict the future. If they could predict the future, they would not be working with you. They would be doing something else because they're predicting the future. And the challenge with that is how do you help your clients in that space? And I think a lot of that space is really on the conversations you have, the questions you're asking the client, talking about risk mitigation, about long-term planning. So where AdvisorCheck comes in great in today's environment, are we going to have a soft landing? Are we going to have a hard landing? Are we going to continue to stay in a high interest rate, high inflation environment? Hard to predict. But I think what's important is that a good financial advisor will help you understand that you are invested for the long run. These are things that you can adjust and fix. And then there are certain parameters, economics, markets, you cannot predict. So you are trying to do your best to work around those given the time frame you have, the amount of risk you're willing to take, and the assets you have to work with. So what AdvisorCheck, how our place can play a really important role in that is understanding, who you're working with, what level of trust that you are giving them, what sort of information you have on them. And eventually, we want to introduce things like monitoring capability. So the ability for you to see, is your advisor doing all the things that they talked about? Are they doing the quantitative things to ensure that your portfolio is performing as best as it can? And are they doing the qualitative things, such as answering your calls in a timely manner, responding to your requests, placing trades or doing timely meetings on a regular basis to ensure the meeting the deadlines of whatever your financial plan are.
Yeah, sounds great. So, talking about the future, obviously we can't predict where the economic, where the markets are going to be in 5 years, but maybe we can have a visualization of where at least AdvisorCheck is going to be 5 years from now. Where do you see the product, the tool, the service 5 years from now to help consumers?
Yeah, we would love to be able to continue to build out the platform as a place where consumers feel extremely comfortable, and advisors and their firms they represent are connecting with these consumers and investors. So I know that our first product launch is really about the background check. So to allow consumers to go out and perform a background check on their advisor, maybe it's someone they're looking to work with or someone they're already working with. They can go now and get a background check on that advisor, as well as compare that advisor to multiple advisors in our platform. I talked a little about the monitoring capabilities. And the reason we want the monitoring is so important to see if your advisor is performing as they said over time is that bad things happen over time. Fraud, as an example, it doesn't happen in one period of time. It happens over a long period of time. And I hate to say this, but good fraud is something that is almost unnoticeable, right? You're stealing a little bit of money over time is almost unnoticeable. And for us to create tools that can help consumers understand, hey, are these fee calculations correct? Are you invested in the things that are appropriate based upon your risk profile in comparison to others? Those are the types of tools using AI and machine learning that we want to be able to help the consumer get to more of a predictive nature. So understand when competency level of the advisor starts to vary, or maybe the service level starts to vary because maybe they're entering their own retirement and they start to degrade, or bad things start to happen. We want to be able to introduce the tools that help predict, give more predictive information to the consumers in the next 5 years.
That's great. Yeah, definitely going along with the AI track, which is becoming increasingly more and more popular and needed in the startup world. Adriel, anything else that you'd like to mention that you feel like you'd be remiss if you didn't get a chance to talk about it?
Yeah, I think what I'm really excited about is, you talked about the movement of transparency. And we're actually excited to launch that. One of our fundraising efforts is we haven't announced it yet, but is going to be a crowdfunding raise, and we're actually calling it Join the Movement. And so that's something I'm extremely excited about. Is we want advisors, the public, investors, consumers to be able to join the movement of transparency. And yes, it is supporting us in terms of fundraising, but it also gives you whichever side of the house you're sitting on gives you the opportunity to be part of that, because we want people that are invested, that want to have that transparency, to want to raise the financial literacy for all, to be able to participate that both as a consumer, as a user, but also as potentially an investor. So that's probably the thing I'm most excited about in the very, very near future.
All right. Looking forward to more information on how people can get involved with that. All right. Adriel Tam, very good to meet you, and great to have you on From the Ground Up at Grit Daily.
Thank you so much, John. Appreciate it.